Trading Unlocked, and we're here with the Forex market breakdown for you for December 17th. And before we get into that, we just want to show you our disclaimer just to remind you that this video is for illustrative purposes only. With that, we're going to jump onto our live screen, and we have the workstation page, which you can get from the menu here at the top of our website for forex-trading-unlocked.com. And let's see, for numbers today, we have still import-export numbers coming out and trade balance for that'll affect the Japanese yen. And then tomorrow we have, info business climate and expectations for Germany. We have PPI for the UK, for England rather, and so that could definitely have a little influence since the pound has been pressuring new highs. All right, so let's get back to our nitty gritty here. So we're going to shut down our news part here, and we're going to also clear up the volume on this chart here. Okay, so right now, as you can see, this is the Euro US dollar chart. Yesterday, the market settled a little bit higher than it did on Friday. We're hovering right below these highs that were set on Friday. Very bullish sign that this Euro US dollar is not necessarily a raging bull, but it is bullish. It seems that the Euro US dollar, no matter how weak the dollar index gets or the US dollar gets, the euro just doesn't want to gain a lot of strength. So, but there's some other fundamental reasons that are keeping the euro suppressed, and it has more to do with the turnover and indifference for many countries now trying not to use the US dollar as a major currency. It's kind of failing for a lot of countries, but for certain ones, they're starting to do more and more deals leveraged in euro, and especially when it comes to borrowing, which is impacting the euro in a negative way. So even if the fundamentals and technicals are very bullish for the euro, there's one major fundamental that is giving a lot of suppression to any bull. It's not necessarily bearish, but it's definitely taking out the upside potential for the euro US dollar for a rally. However, we are hovering below this 112 even high here, and I think that we have a very good shot over the next few sessions after we have a little digestion of the dollar index to make a breakout for these highs. So right now here is what I would use for your risk. I think that you take the high from Friday right there as your breakout to the upside. Remember, we're not looking for any major moves. Now here's something to take into consideration too. The euro US dollar has been trending higher now for a few weeks, and it's a very steep slope here. So it wouldn't be out of the realm of possibility that we start to go sideways before we start to make a breach of this level here. And what would be more conducive to this trend, especially considering how weak of a bull it is that we kind of maybe go sideways and start gravitating towards this lower upward sloping support line here, which would be more of a solid trend. And as you can see how them overall since October had this nice rally, came down, set the higher move low up here. We've made this higher move high, so we could probably drift higher up around this 112.5 to 111.5 as we cross over through December and begin the new year 2020. Can you believe it that this fourth quarter and the year 2019 is coming to a close? We only have 2 weeks left of trading in the US and the rest of the world for 2019, and of course it'll be broken up by 2 holidays, shortened markets and shortened market hours. So take that into consideration, everybody, before you lock in any trades for the holidays. All right, so we're going to change the symbol here real quick and show you how the dollar index fared yesterday. So as you can see, yesterday there was a nice little bounce after Friday's little rally. And then after it held, it fell apart and then came back to just slightly unchanged on the day. But still, the dollar index is a bear. Now, there's a short-term buy signal that had occurred here on Friday, this little reversal right here. Is it bullish? No. What I think is that's because it's in a bear market. This is a short-term buy signal. What you have is the beginning of a potential corrective rally in the dollar over the probably next week and a half. Which would kind of put a little thwart on the bulls for the certain currencies that are breaking out against the US dollar. Speaking of which, one of the breakout currencies is the British pound. So now they had their elections on Friday. As you can see today, the pound is much lower. I would say that this is probably because this is more reactionary to a balancing of what's going on. I think you had a run up, excuse me, because of a lot of bullish influences because of the election with Boris Johnson and what's going on. And then yesterday you can see it was kind of a quiet trade, and now today it's hanging on its low. So this right here I think is more profit taking, and I think the level to really watch here would be the breakout high right here. So I think this is where you're going to probably see a lot of support. Let me change the color so this becomes more clear. Okay, so as you can see, this 130 area right here is $1.3011. That's kind of a good support base for the pound. So it'd be nice to see it maybe settle back here, bobble around this area before it starts to make a move higher. Now the pound, unlike the euro, has had a really nice sloping trend now for quite some time. Let's move that a little better there. Okay. All right, so as you can see, this is not a bad upward sloping trend here, very manageable. And as we move sideways into 2020, the upward sloping support line here starts to come into this congestion area, which was a basing before we broke out right before the elections in the UK. So short term, I think you're in a profit-taking mode here. I'd be leery of shorting into this area here. If you are going to, I would definitely have your risk no more than the current high that was set on Friday. So if you look at this here, you have your upper parameters of $1.3513 for an upside breakout. Most likely you're going to see a containment over the next week or so below this 135.13, a little digestion and bouncing above this $1.3011. This $1.30 in the pound is a very significant level. So it'll be interesting to see if we can maybe come down and touch it and then bobble around it before we make another run for new highs. So we'll see what's going on with that over the next couple sessions. Remember that we are heading into holiday markets. Okay, here we go. We have the US dollar Swiss. So you can see once again that the US dollar is definitely showing weakness here. Just like now in the pound right now, like I said, I think that's a corrective move that's going on. A lot of digestion because of dollar bears and bulls and other major currency crosses against the dollar. So that being said, today we've made a lower move low. So don't try and catch a falling knife, folks. Now the one thing that you can notice here that is interesting is that the slope, let's move this over. Sorry about that. I'm going to get this chart over a little bit. Okay, if you look at this slope here that the Swiss is on, this is very, very steep. A very, very steep slope. So it wouldn't be us. Like I said, this would go with the scenario that maybe we have a little corrective move in the dollar index and see some strength come into the dollar because this is so steep here. Now I wouldn't try and catch a falling knife, but it wouldn't surprise me to see a little bit of a basing here and then a little bit of a corrective move higher for the US dollar Swiss, meaning the US dollar probably would be getting a little bit of a boost, which would make sense since it's had such a severe break over the past week or so. That being said, if you are a bear, I would say use this level here. Let me put a horizontal ray out. So this last little spike high, I would say right here about the 98.72 area, just below 98 even, or 98.80. Anything below there, I think, keeps the market in a little consolidation pattern. As you can see, we had all these lows back here. So that's coming right into where the market's trading now. It's a little bit below it right now. So where we had all this support, we're probably going to start to see resistance, which would be up from this 98.40 area, kind of above the high of today, up into this 98.72 area. So now let's take another look at a market that, believe it or not, surprisingly, seems to be going the opposite direction when it comes to dollar sell-off and dollar rallies. So, like we said, we have the dollar still under pressure, but not against the US dollar yen. That is a raging bull. Just below the highs there, and today is confirming the fact that it's going the opposite way of the other currencies. So while the dollar may be weak against a lot of currencies around the globe, it is strong versus the yen. So a lot of it may have to do with them coming closer to a trade deal with China. And the one thing is that this is helping the Japanese. It's softening their number, so anything that comes out bad is actually reflectively okay because of their currency position right now. That's the wonder of currencies, how certain things can look bleak, but actually you're not in a bad situation. So now let's take a look at the Australian dollar, US dollar, and see what's going on here. This one, we have another sell-off here. We had a nice little high that was set on Friday. As you can see, Australian dollars losing strength to the dollar. So here's where your dollar index is getting some strength. It's not in your major, like the euro is higher. not in the Swiss, but it's getting it in the yen, it's getting it in the Australian dollar, it's getting it in the Asian currencies, a lot of your lesser major currency crosses. Now, is this a bear? Absolutely not. This market's been in a bull market since October. Had a nice corrective move lower like this, and now it's just had a very steep trend higher. But if you look at here, we have this low. Let me put this here actually. This is the low you want to look out for. Okay, so below that we have here, this was a major swing low, higher move low. And then we have a breakout here. So we had this high, this low here. Now we had a breakout here for a higher move high. Also off of this low, we had a high, higher move low, higher move high. Right now, as long as we stay above this 67.99 area for the Australian dollar, US dollar, this is probably just a little corrective slide before it starts to digest and make another run for higher levels. That would be as the dollar index erodes more against the currencies over the next couple of weeks. But right now, we're kind of in a phase where I think for a couple of days into the middle of next week that we might see a little bit of lift to the dollar, but only against the lesser major currency crosses. I don't think you're going to see it too much in the pound or the euro. Now here we're going to pull up a chart that is very interesting. We have the New Zealand dollar, US dollar. Boy, what a bull this thing has been for as of late. Now here's something interesting. Like I said, it's your lesser currency crosses where the dollar is gaining strength over the past yesterday into today's session. This is also on its low. So right now you have dollar strength, but it's not coming in really big as far as when it comes to the euro, let alone with the Swiss. So that being said, you have two major flight to quality currencies that are not sliding, and then the rest are. So this means in my idea, or my perspective, once again, is that this high right here and this lower trading off of Friday's high going now where the market seems to be leaning on the offer pretty much, that we are showing just a corrective phase for the dollar. Remember, even for the New Zealand dollar, look at this. This is not too bad of a slope. So we'll take this off of this low here into here. You can see overall the trend since October 1st when this market to bottom, which was a big turn in the for the U.S. dollar. So remember, we have a major sell signal that was occurred in October for the dollar, and then we'll get to that. We'll close with that for this video. So right now, like I said, here's the upward sloping support line, not bad at all. So for us now to go sideways to a little bit lower, correcting towards this blue line, is not outside of the realm of possibility. Now, I would be very careful if you are a bear. Use the high from Friday as your marker. Any trading above this level here is a bullish breakout, and I would not fight that because this momentum, as you can see, even when the dollar hasn't been really selling off that big, the New Zealand dollar has been rallying. So it has been strong basically against the dollar, even when other currencies were weak over the past few weeks. So this is very important. So what I'm saying is take into account that right now what's going on over the past couple sessions off of Friday's high is most likely profit taking and just a mere corrective move for the dollar before all of a sudden it takes another wave lower. So what is he talking about? Let's go back to the Dixie chart, our dollar index, and show you what I mean. So with the dollar index, as you can see how it's been breaking, what you didn't look at is, or if you haven't been following us, is our major sell signal that we've been tracking. Now, as you can see that the market here, this is October where it made this high. Now, this happens to be a high probable Japanese candlestick pattern where I have this arrow here. Okay, so we'll make it black so you can see. Okay, so here was the high that was set on October 1st for the dollar index. And at that point, you can see on most of your major currency crosses, they also had bottom versus a dollar if they hadn't already in September, like the New Zealand dollar and a couple other ones. So, but the biggest thing is this is a bearish engulfing line that was closed out on October. Now remember last month in November, the dollar was very strong, but not really. It didn't rally much. It was just positive every day, only slightly. And then what happened in December, we opened up and all of a sudden, shabam, we just went straight lower, as you can see from the daily chart already. And we made a newer move low over the past one that took out October's low as well as November's low. And right now we're still right there. It's 97.42 where the market settled yesterday is right there. Well, like I said, I think that the market's in a correction, especially since we have the sell signal that this is a monthly chart. Monthly charts are for multiple months. So the signal, it shouldn't be just for Right now, it could maybe the signal was only valid for this time frame, and we get I mean, the market overall for the dollar index has been in a bull market for since 2018, but now it's starting to show signs of being toppy. And also, there's a potential chance of this being a big, gigantic head and shoulders, which if this is a head and shoulders pattern forming, and this is a valid sell signal in October, which right now it remains a valid sell signal, and we're going to put this little marker here. So only above this 99.66 would we get bullish to dollar index. All trading below this keeps this market in a bearish to sideways posture. Right now, I'm looking at it as a bear. So once again, we'll go back to the euro US dollar and see what that means for especially a major currency like the dollar or even the pound like we looked at before. So if that is the case, now let's go to the daily. Now here's the thing is too is on the euro, just like in the dollar index that had a bearish engulfing line, this, the euro US dollar on the monthly, had a bullish engulfing line. So we have in the dollar index as well as in one of the major currency crosses a major buy signal. So that would be a sell signal for the dollar. If these signals are valid, and this low here would be the main low to key off of right here, that would be around 108, yeah, around $1.08, just a little bit above $1.08. Any trading above there keeps this market in a sideways to bullish posture. Now remember, this has been breaking since 2018. So the euro US dollar is very reflective of the dollar index. Why? Because it's one of the biggest currencies versus the dollar index. So on a daily basis where it may not be in tandem with some of the other currency crosses, it definitely is over the long term. It's very significantly obvious that it does trail in that way. So let's put it to the theory that if we did have a bottom in the euro US dollar, that the signal is a valid sell signal, then we should go in December as well as into January, February, March, maybe even into the second quarter of 2020. Keep this market moving higher, probably seeing the euro get back up to around $1.15, $1.17 area. Even if we were to make a run up to $1.20, I think you would have a big fall off initially from that. I don't think you're going to see just a major bull in this market that's going to hold, because like I said earlier in the webinar, there's a fundamental reason that is keeping the euro from being a rate. It can make it a bear, it can help with the bears, but it can't really, it definitely inhibits the bulls. So that being said, we'll go back to the daily chart here for the euro US dollar as we close. We gave you two big signals that we reviewed. We had the bullish engulfing line in the euro US dollar monthly that coincides with the bearish engulfing line in the dollar index, which right now seems to be holding true and giving us the right side of the market to be on. So we'll be riding that and looking at that over the next few sessions, and also as we move into the fourth quarter and see how that manifests. So right now, those are the numbers. Remember, we're heading into a holiday trade, so use caution. Don't get too crazy as far as what you're going to do with your trading. So to really have rational expectations. And if you want to learn more about those Japanese candlestick patterns, you can read a book called High Probable Japanese Candlestick Patterns. It's available on Amazon.com on Kindle version and paperback. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. This works in Forex markets, futures markets, options markets, stocks markets. You get the idea. It works in all of them. And for those of you that don't think it works, you're probably applying them incorrectly. Read the book and you'll see why. Especially to just give you a hint, if you do anything intraday with candlesticks, you're doing it wrong. So that being said, I want to thank you very much for your time. Please check us out every day at forex-trading-unlocked.com. And if you would subscribe to our YouTube channel, we're trying to get our subscriber base up so that we can help build up our streams and offer more of them for you. So with that being said, you have good luck today in the markets. Use caution. Remember, we're heading into holidays, and you have good day. Make